Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Monday, August 4th, and in his latest Big Picture installment, Briefing.com CEO Dick Green returns from an extended vacation to find that the key fundamentals have improved modestly, but with little impact. Overall, market sentiment remains very poor, Dick writes, as everything is still perceived in the most negative light. The preconceived notions that this is a recession, that consumer spending will be defined by oil and home prices, and that there is a credit crunch continue to dominate conventional wisdom. The tone of analysis and journalism remains defined by looking in the rearview mirror rather than looking ahead. This is most evident in the economic data. The second quarter GDP data were much stronger than generally acknowledged. The 1.9% annualized gain in real GDP was less than expectations, but that was entirely due to an inventory devaluation. The real final sales measure, which excludes the inventory component, reflects current demand and was up at a 3.9% annual rate. This was much stronger than any forecast of which we are aware. Expectations for second quarter GDP were dismal 3 weeks ago, yet the GDP numbers were generally spun in a very negative light, rather than recognizing that conditions are not nearly as bad as underlying presumptions. This is further confirmed by the reality that the outlook for third quarter real GDP is actually quite good. An increase of 3% is likely so long as the inventory valuation adjustment does not interfere again. The fact remains that consumer spending continues on an upward track and that the impact of the fiscal stimulus is far from over. Higher gas prices and lower home prices have yet to stop consumer spending from rising and won't. There has been good news on the inflation front too. It is indeed surprising to see that oil prices dropped to $125 a barrel from $145 a barrel. The recent dip is good news and could lead to some nice inflation numbers in the next few months. If oil remains at this level, energy prices in the August and September data will be flat or down, and that could produce some very low total CPI numbers. There has also been a substantial decline in many other commodity prices, such as for natural gas and many agricultural products, that hasn't been given due importance. Second quarter earnings, meanwhile, were mixed. Financial firms reported large losses. The auto company numbers were terrible, and there's justified concern in that regard. Excluding financial companies, however, earnings are up about 4% from the second quarter of last year. The overall analysis reveals decent earnings trends for most companies. Fears of recession and the sinking tide of the overall stock market have pulled down values on companies that are actually performing reasonably well. Forecasts for third quarter earnings at this time call for about 8% earnings growth, and that includes financial companies. The earnings outlook could get much better as analysts look into the fourth quarter and into 2009. Expectations that the Fed will tighten policy in the quarters ahead have abated, and this is rational. Economic demand does not warrant raising rates. Inflation numbers will cool with improved energy price trends the next few months, and the housing market remains fragile. The Fed typically holds rates steady for at least several quarters before reversing policy after the end of an easing cycle. That is likely again the case in this cycle. There are still clearly deep problems for many financial firms holding mortgage-backed assets, yet the situation has improved over the past 3 weeks. Numerous firms continue to take the steps necessary to improve their balance sheets by raising capital or by selling assets. Furthermore, it remains clear that there is no credit crunch. Companies are not citing access to credit as a problem in their outlooks. So what does it all mean? At some point over the next few months, the improved conditions should provide support to the stock market. For this week's full Big Picture column, place your cursor on the R-View tab at the top of the page and select the Big Picture, which is the fourth page listed on the drop-down menu. I'm Pat O'Hare for Dick Green and Briefing.com. Thanks for listening.